Hi everyone, let's run through the low time frame scenarios including potential trading setups. I'm going to start with the alternative scenarios and then work towards my preferred scenario. Starting with the alternative, that this is a very impulsive move to the downside, wave 5 ending over here, and this then being a wave 1 followed by a corrective wave 2, and now we expect a big wave 3 to the downside followed by a 4 and then a wave 5. Couple of reasons why this is an alternative and not a preferred scenario is that wave 2 retraced to the 0.886 Fibonacci level taken from the high of 5 to the low of wave 1, which is a very rare target for wave 2. And also this wave 1 over here is not clean at all. A leading diagonal is not possible because this wave 5 is longer than wave 3, which is not allowed, but it also doesn't look like an impulsive structure because this wave 3 is then way too short. So this looks to be more corrective than impulsive, but in this scenario this is a wave 1, as we just keep this scenario on the chart just in case. Then we have a corrective wave 2, and now we would expect a big move to the downside and then some sort of a 1 2 1 2 3 4 5 4 5, and you know the drill, more downside to come. Currently this could be the Fibonacci level for potential wave 4. If we close candles above this 0.5, it is more likely though that we're going to continue our way to the upside after this swing failure pattern here at the lows. If we go to the second scenario, we're looking for basically the opposite, which is a very big move to the upside. In this scenario, the high time frame wave 2 is already in, and then we're looking for a 1 2 1 2 and then eventually upside in a very big third wave. In this scenario, you can see that wave 1 ended over here, which is a much better end for a wave 1 to be honest, and then a 1 2 3 4 5 over here. And then this first structure is an expanded flat in the W followed by an X and then eventually a 3 wave in the Y. Over here you can see that this wave 2 then ended at the 0.382 fib taken from the low of 2 to the high of wave 1, which is a rare target for wave 2. This is not a common target, it's a rare target for this blue wave 2, but nonetheless it is rare, so it is possible. And you also see that it's a WXY scenario, which is also more rare in a wave 2 because wave 2s tend to be zigzag scenarios, which is a 535 and also a more deeper correction, usually going to about the golden pocket area, the 618 and the 66. So now this wave 2 has to kind of be finished because we're already getting very, very close now to the 1.618 fib time pulled from the low of 2 to the high of 1. And usually wave 2 is not taking that long compared to wave 1. So yeah, we definitely want to see volume pumping all the way up in order to have this bullish scenario still being valid. If we then go to my first WXY count over here, a corrective structure, we then have again the wave 5 ending over here, followed by this W and X, but then wave Y ending over here. And this 3-wave structure is then a wave A. This is a legit target for a wave Y because it hit the 0.786. And in a WXY, each wave tends to follow up the other one between the 0.786 and the 1.382 Fibonacci. So the 0.786 is a legit target. In this scenario, we then have a 3-wave in the A followed by a 3-wave B, and we would now be looking for an impulsive move up for C to then finish the blue B. So the blue B has an expanded flat A, B, C, and as you can see, the expanded flat most common target, the 1.236 and the 1.38, has been very nicely respected with a wick inside this area and then at least a little bounce for now to the upside, but we would be looking in this scenario for, of course, a bigger bounce to the upside, with then the most common target area for a wave C being the white box over here between 28.5k and 29.3k, which also means we could take the double highs over here, the double top, which I think would be very nice as a little liquidity grab for then a potential short setup to the downside, where positions can be entered in this area, stop loss somewhere above, and then trading it to the downside. If we then go to the invalidated scenario, very important, I do like to mention this because of the video earlier today, it is very important that you have preferred scenarios and alternative scenarios in Elliott Wave, and the moment a preferred scenario is going to be invalidated, you immediately can switch to look for the next trading setup. In this scenario, we were looking again for the end of wave 5 over here, followed by a 3-wave expanded flat in A or W, then a triangle potentially in a B or X, and then eventually a move to the downside in a C or a Y wave. However, it is invalidated. This is not a triangle. This is not wave D. This is not wave E. It's way too short, and it also didn't reach the minimum targets, basically Fibonacci targets taken from the low of B to the high of C for a wave D, for example. this is not a triangle anymore. So this scenario is invalidated. And the nice thing is that we pushed to the downside, and I also updated the Discord group as well, saying that invalidation of the triangle is basically moving below the wave below over here. And then if we continue going down, the next thing I would be looking for is basically the double bottom, which is this level over here, the double bottom at 26.6K on my Coinbase chart. And that is leading to this scenario. And this scenario, I've been mentioning this scenario for many videos now. So probably many of you that have been watching my videos know about this scenario. And I said, hey, if we continue ranging and we are going to get close to the 1.618, or at least past the 1.618, this scenario is going to become more unlikely, because then wave Y is taking very long. But then out of nowhere we got this dump during the day, basically exactly on the 1.618 fib time, taken from the high of 5 to the low of W. So I'm basically comparing W compared to Y. So Y is taking longer than W in this scenario. And then we have this as a 3-wave W followed by a 3-wave X and then a 3-wave Y. Most common target for wave Y is between the 1 and the 1.236, as you can see, very nicely respected indeed. And I kept saying with the potential trading setup for this scenario that this is and only a swing failure pattern trading setup, meaning, as explained in previous videos, that if we dip below the double bottom that we created with one wick here and the other wick there, you want to see price wicking below, closing above, and then trading it to the upside. It wicked below, it closed above. That is a potential in this trading setup. And then with this trade, if the entry was over here, as this was a swing failure pattern trade, probably the stop loss should be at break even by now, as price is moving to the upside, for then potentially a bigger move to the upside, because this could have been the low of an A wave and then a 3-wave A in blue, followed by a 3-wave B. Looking again for that expanded flat before then a move to the downside in a wave C. So in this scenario with a swing failure pattern trade, it's always going to be at least a break even, if not a profitable trade. And this is currently then my most likely and preferred scenario, with the, let's say, second most likely scenario being the bearish scenario, because if we do continue to the downside, it's very likely this is eventually some sort of an impulse. But I would like it more if this is a WXY in a bigger A and we now move up for B. That being said, I'd like to thank you for watching this video. I hope it was valuable or helpful. My next video will be tomorrow morning at 7 AM Central East European Time. Thanks for watching and subscribing. Bye bye.